Welcome, welcome. Retired into the stock market November 11th, 2024. How are you tonight? Welcome to my live. Godric here, your stock market mentor. Going to talk about some stock market stocks tonight. Strangely, we have an all-time high on the Dow Jones, the NASDAQ, the S&P 500. Can you see it? 44,293 plus 300. So, most of you guys are making good money. You're not that smart. It's riding this wave. I do suggest, though, you have some protection, like a put. For example, now's a good time to buy some puts, like to protect your account, like a hedge, because the market's so high. For example, you went out 9 months and bought some SPY puts. Let's look at the SPY. Research. SPY. Let's go out 9 months. If you guys don't have an account, open your account at Schwab. A lot of reasons, but mainly they have the best customer service. Don't do Robinhood. You'll thank me. I heard Webull. I don't know about Webull. I can't tell you enough about Webull. All right. So when you want to buy a hedge, which is to protect you from a correction, you go out like at least 9 months or a year. Okay, so let's just make it a year, right? So 2026 January. Okay, easy peasy. 2026. Let me get this out of the way because okay, that's 430 days. Okay. Now you're gonna buy a put out of the money. We generally anticipate a correction of like 30%. Okay, so you're gonna buy an option 30% out of the money. So if S&P is 598, let's just say 600. 598 today is up. Says it's up 57 cents right now. So that would be 600, right? So 30% off that is 30/60/90. So 600 minus 90 is 510. So we're gonna buy a 510 put. Okay, 1 year out. It's gonna cost you $12. Okay. So let's write that down. Hedge position. One, what is it, 2026. SPY put 510, which is 30% out of the money. It's 12 right now by 1247. 1232 by 1247, which means it's a put option. You're gonna buy the put, and long the put, which is a short position, and you're paying roughly $1,247. Now this would be good for an account that's around I generally say buy your hedge about 5% of your account, right? So let's do the calculator. You guys get your calculators ready tonight. Let me do some math. So 1,247 times 20, which signifies 5%. About $25,000 account can have one call or one put, about $1,200, which is 5%. So I like to say, if we do have a correction, and we will, so get ready, let's say in 2025, not saying it's going to be a crash, but it will be probably a significant dip. This put you're going to buy is going to go up drastically. It's going to go up with leverage. And that'll protect your long positions, okay? And that's what it's for. Now, you have two choices when the market corrects, when you have a put. One, you can sell your put and take the profit, okay? Two, keep your put, see how far it goes. Just keep it for the duration. And what generally happens, in my experience, is that put you buy for $1,200, just say kiss it goodbye, because it's going to probably buy worthless. The market's probably going to be fine, and we're probably going to go higher, okay? However, it's like fire insurance. If we do have a correction and the market doesn't go high right away, you're going to want to have that put. Like if your house burns down, you want to have pay for that fire insurance. I'm giving you a cheap fire insurance. I'm giving you an easy way to get a hedge on these long positions that a lot of you guys have. A lot of you guys are at major risk, okay? The value of the 5%, you're only spending 5%, is that we can get 5% from what? What am I teaching you guys? From a cover call. Thank you guys for coming in. Hit the likes. Tap, 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 like a video game. Get those likes up to 1,000 or 2,000. Appreciate you. Godric here, your stock market mentor, talking about protecting your account from an inevitable correction, which will happen. You're going to buy a SPY put 1 year out, representing 5% of your account. If you have 25K, you can spend one SPY put for $1,200. If you have 10K, buy a put for $500, which is 5%. If you have 100K, spend $5,000. Now, the value of the 5% is interesting because I've been teaching you right cover calls every month. You can get 5% on the average cover call. So it's not like you're going in your pocket and taking out $5,000 and you're going to waste that money for fire insurance or for protection for a hedge. You're getting 5% from a standard cover call you can write any time, any month, on most any of these stocks, NVDA, Palantir. There's a couple new ones we're doing. AMD, right? Roadblocks, right? Different companies. But so you can get 5% from a cover call. Take that 5%, buy a hedge 1 year out. Okay, give yourself some of that protection. So when the market's down 30%, your hedge will be up, and maybe it'll give you like only down 20%, because that put will go up in value. You can sell it, like I said, take the profit, or you can just keep it and see what happens. But there's a good chance that it may just evaporate, and you're gonna have to just kiss it goodbye as a fire insurance. Something that better to have it and not need it than to need it and not have it. Thank you guys, appreciate you. Talking about some stocks tonight. I just talked about the put hedge for 1 year out, 5% of your account. You can get that money from what? From the cover call. Dow Jones at an all-time high. Let's see, Apple's down today. Some stocks I follow. Give you some more here. Berkshire Hathaway. Anybody has that? Bitcoin. I want to talk about Bitcoin tonight a little bit. I'm not an expert in Bitcoin. I generally don't do crypto, but today it went up, $7,000, $88,000, all-time high on Bitcoin. Matter of fact, I think I have the Bitcoin chart here for you. Do I? Yeah, this is kind of like what the Bitcoin chart looks like. This is going back from the 2000s. It's kind of a tricky chart. If you were in this crypto, there's times when it's really down. So I would say volatile, risky. But if you can trade these peaks and valleys, you can probably do great. You know, like if you sold it back in 2020 when it went up to 60,000, it dipped back down to 20,000. And then now it's at 88,000, 90,000, right? So what? Probably sell here or soon, and then wait for a dip. Trading, buying the dips, selling the peaks. It may go higher because of Trump. I want to do something with Bitcoin. He wants to make a government investment in Bitcoin. Okay, we'll see. Appreciate you guys. Thanks for the likes. Hit that like button, guys. Hit that screen for me. Let me get some people in here. I will be taking questions. I come on every Monday night to mentor about stocks and to talk about trading. My specialty: generate monthly income from your stocks, pay all your monthly bills, and what? Retire into the stock market. Show you how to do that. If you guys want to throw me a sub, it's only $5 a month. I'll teach you how to do it. You can DM me with your questions. Please, just one question at a time. Appreciate you. I'm up here talking about what position to do, discussing stocks. I will pull up your stock. Want to put it in the comments. Like I say, don't be upset if I tell you it's trash. I have a very strict criteria for what I do. I have the reasons for what I do, and I generally go with the best, the tried and true. And I'll take a risk here and there if there's reason to. If it can get you a good monthly return on the covered call or the naked put or a trade. All right, let's see what we got here. I can only scroll back so far, so if I missed your call, if I missed your question, don't freak out, just put it in again. Do you like NVIDIA? Dr. Jim, welcome to the live. Do you like NVIDIA? Yes, I like NVIDIA. NVIDIA is golden right now. It's the boss, the #1 main game. That and Tesla coming up. But NVIDIA is looking pretty good. It just unseated Apple for the #1 company by market cap. And I think it'll go higher. Think about NVIDIA, there's a lot of trading bots trading. There's a lot of institutional investors trading. And I keep telling you guys, don't be greedy because it'll go up 3-4 points, then it'll come back down. It'll go up 3-4 points, and it'll come back down. Look at the 3-month chart, 6-month chart on NVIDIA. You'll see has little peaks and valleys. And if it goes up 3-4 points, it'll sell down. And the reason is because these institutional traders whose job it is to make money have to sell. When they have a gain, a profit, 3 points, 2 points, they sell. Take the profit, the stock comes back down. So just understand, when you're in the stock, it shoots up 4 points, you think you're on top of the world. There's institutional investors that are going to sell that stock, come right back down, and then they want your profit. That's why people trade, you know. It's difficult in a sense to trade because we don't know how far it'll go down, how far it'll go up. You know, NVIDIA was at $100 not that long ago. It went to 140, dipped to 100, went back up to 140. But keep in mind that if you are in the shares or a call option and you're trading NVIDIA, keep in mind that some of these investors, big money, that manage pension funds, that manage, $100 million retirement funds, they're going to get like 2 points. They buy the stock, let's say here at 144, tomorrow morning, it'll be up 2 points, 146, and they'll sell. It'll come back down. And if you didn't sell, if you wanted to get 5 points profit, and they're trying to get 2 points profit, who's going to reach their goal faster, right? And then while you're trying to trade it, it comes down on you. Now you're at a loss, right? And then they're buying, goes right back up, and then they sell, it comes right back down. So keep in mind that. Don't get greedy. Take small gains and walk away. That's my suggestion on the video. Okay. Long term though, it'll be fine. If you want to do a cover call in the video, by the way, let's pull up the cover call. NVDA, my specialty. So like today is November 11th. I'll just go to December 20th, which is option chain. Click on options. Go all, and then November 11th. Just go to December 20th, which is next month. 38 days. And you'll buy the shares here at 144. Let's just say 145, right? Which is 14,500 investment for 100 shares. You gotta have 100 shares to do a cover call. And then you agree to sell the shares next month. And I'm gonna tell you what option to sell. There's about 1,000 options for each of these stocks. I'm going to show you the exact one to get the right return. So if you buy here for 145, let's look at the 150. Gives you 5 points of share growth. And you're going to get 790. 152 is 715. Okay, so you're going to sell the one, or write the 152. Hang on a second.
For example, in inverters.
But given the sort of these uncertain times in terms of inventory management, we don't also really know when these things change, right? We've been waiting for the recovery of China for several years, recovery of the auto industry for a while. So it's sort of hard to tell. There's some uncertainty ahead. In these uncertain times, what
Sorry about that.
Control? Is there going to have to be a larger focus on, say, cost? This has been the focus for many German companies I've spoken to.
Okay. We're writing the 152 for the video.
What you can control in this environment.
Turn that a little bit.
Most important, what that means to us is,
and that's going to get you exactly $7 by $7.25. That's about 38 days, let's say per month. And let's do the math, okay? So do this with me, 7.15, which is premium divided by the share price of 145, equals 4.9% return. 4.9% return. And that is your income. It's $700, $715 return for a $14,500 investment. You can do that about every month. And that's your business. Appreciate you guys. Hope that wasn't too much. That's about NVDA. Questions. Look at CLSK. G Money Shop. Look at CLSK. I'll pull it up for you. I'm not familiar with that stock. Let's go. CLSK. All right, Clean Spark Incorporated on the NASDAQ, $17 share price, not a robust share price. So that is an X, a red flag. That's one. Two, let's see who has the volume. Ooh, 62 million volume. 68 million volume, has the volume. Check mark. Let's look at the equity, 5 years. It doesn't have a 5-year chart. Well, hang on a second. It does have a 5-year chart. It was $7 5 years ago. But, so it is technically up. From $6 to $17. So I will give it the 5-year chart. Chart, check mark. Even though it went up to $30 in before the COVID, and it went all the way down to $3. So it has like a dwindling share price. Now it's coming back up. So probably it's going to do better. Looking at those technicals. And then CLSK, Clean Spark Incorporated. Let me read it for you. Clean Spark Incorporated operates a Bitcoin miner in Americas. It owns and operates data centers that primarily run on low carbon power. Its infrastructure supports Bitcoin, a digital commodity and a tool for financial independence and inclusion. The company was formerly known as Straightein Incorporated and changed its name to CleanSpark in November 2016. CleanSpark was incorporated in 1987 and is headquartered in Henderson, Nevada. Appreciate you guys. So, if you look at the monthly, it went up today by $4 from from 13 to 17.61, up $4. So it's definitely matching the Bitcoin price. It's probably leveraged. But because it's such a low price stock, I don't like that part. Let's take a look. I guess it won't have premium. It does have revenue, so it's selling something. Maybe it's mining. No PE. I like it to have a PE. So on the PE, what do you give it the X? PE, no PE. No profits. I'm not really sure if it can have a PE though, because if it's just doing Bitcoin mining, right? What else? Let's give it some more criteria. It's probably a new stock. So there's no, for example, there's no dividend. No dividend. So on the dividend, we'll give it an X dividend. And then I'm going to check the cover call, CC. See if we can give it a cover call. Does it have an option chain? Okay, let's take a look. I see an option chain. Has the volume for an option chain. December 20th, which is 38 days. If you buy the shares here, that's $17,66, which is $1,766 for 100 shares. We can write let's say the 20 call, which means you agree to sell the shares at 20 for next month, and we get for that 223 by 250. So $2.23 premium. That's $2.23 per share, or $223 per 100 shares. And if you remember, NVDA paid $700 for a 14K investment. This one pays $223 for a $1,700 investment. And let's do the math on that. ROI, return on investment. So 2.33 divided by the share price of 17.61. Is that what it is? 17.66. You buy it tomorrow at the market. 13.19% return. More than twice NVIDIA. So these are interesting cover calls, because if you think about like doing a monthly cover call on this one, what symbol were we at, guys? CLSK, which is a Bitcoin company. It's paying 13% a month, so you can technically double your money in 1 year. 130%, give or take. The stock may fluctuate, but based on that, I love the cover call. So with 6 criteria, I got share price, no. Volume, yes. 5-year chart, yes. PE, no. Cover call, yes. Dividend, no. So 1, 2, 3. 3 out of 6. Not great. I don't prefer it, but I love the cover call. Thank you for that. Guys, check it out. If you want to follow Bitcoin, you could buy this stock. It's an option. Though there are other stocks. I think BITO is the main Bitcoin company. Let me see, BITO. You guys want to follow Bitcoin, you can buy that stock. CLSK, you can do a cover call every month, or you can do BTO. Is it BTO? No. BTI? What is it? Let's ask ChatGPT. ChatGPT is kind of good for some questions. It's not good for everything because they don't have that human experience. But, for example, like, I'm going to just ask a general question. What's the stock investment to buy Bitcoin? It knows, like, simple stuff like this. It should. ETFs. Stock companies that exposure to Bitcoin. MSTR. Write that down. BITO. That was it. BITO. That was the one. Take a look. BITO. So if you guys want to ride this Bitcoin wave, this stock BITO is $24. Also not a great share price, but has a volume 30 million. Has a 5-year chart. Similar to the other one. The investment BITO, ProShares Bitcoin ETF. The investment seeks investment results before fees and expenses that correspond to the performance of Bitcoin. The fund advisor seeks to achieve its investment objective primarily through managed exposure to Bitcoin futures contracts. The fund does not invest directly in Bitcoin. The fund advisor will generally hold its Bitcoin futures contracts during periods in which the value of Bitcoin and Bitcoin futures are flat or declining, as well as during the periods. So it's basically trading Bitcoin, which is interesting because it's trying to beat the Bitcoin price. It's trading, so it could technically underperform or outperform. It actually doesn't own the Bitcoin coins exactly. It just trades the futures. So BITO symbol for a Bitcoin exposure, and the price is $24 a share. Now we know that Clean Spark was paying 13% return on the cover call. Let's take a look at the BITO. Okay. Cover call, shall we? Get the monthly return. Buy the shares here at $24.05. That's $2,450 per 100 shares. And go out to December 20th, 38 days. $24. This is $24. We agreed to sell it for $25 for $110. So it's not paying nearly as much as Clean Street. $110 for the 25. Did I do that right? Yeah, so let's just do the math on that. 110 premium divided by the share price of $24 equals 4.5%. Similar to what stock was that? Till NVDA, 5%. Which is to say that this is probably not volatile, not so volatile. It's more steady. So if you want a more volatile, high return, you can try that one. CLSK. Want a more steady Bitcoin return, you can try BITO. And there's one more. There's more. I have it here actually. Let me show you this one because I got this one for you. It's called Mara. By the way, if you want to take a picture of this, some of the stocks I follow. Netflix just broke an all-time high, 805 plus 10. NASDAQ is about to hit 20,000. That one's plus 12 today. Here, Tesla, not an all-time high, but a yearly high. Went up $28 today. 350. And I think it'll probably break the older high, the all-time high of 414. So guys, look at Tesla. Watch Tesla now. If it can break 414, it's broken the all-time high. It's probably going to go higher. It can break out. So give it maybe 3 months. See what it can do. Some pictures for you today. Here's the Tesla. Here's kind of what it looks like. It is volatile. Not for the faint of heart. We do cover calls on Tesla. I always tell my clients. They ticket $1,000 or more a month on Tesla, and that was when it was $200 a share. Now it's $350, so it's paying more like $1,500 a month. Here, let's look at Tesla cover call real quick. Tesla. If you have the money, this is the trade. It's a little bit better, higher quality than these other stocks. 357. Let me give you an example. 357 share price, a nice robust share price. Why is that better? Because stocks have gone up and up and up and up, have made investors money, and made investors happy. If your stock is $10, $20, no one's made money from that. No one's really made money. That's why it's not good. So the higher share prices cost more, they're better. Okay, the lower share prices are trash. For example, a penny stock is trash because where has it gone? So Tesla gets the robust share price, check mark, 1. 2, I'm going to just tell you the volume is there, 210 million. Volume's good because more liquidity, more investors supporting your stock. And when that stock dips, they're going to buy the dip, bring your price right back up, it's going to save your ass. And we can go to PE, it has a PE check, has profit, has revenue, 97 billion. Market cap, the other dividend and cover call. No dividend on Tesla. So dividend X and then cover call. Has a cover call. So it has 4 out of 5. See the difference? I actually have 11 criteria, but I'm just going to do 5 tonight. Tesla has 4 out of 5. And let's look at the cover call. You buy the shares here at, well, look at this. It's already up $8 in after hours. So $3.58. So tomorrow, it'll be $3.58. I hope you guys bought some today. Did I tell you it's going to 414? All right, so I'm just going to do the closing price for $3.50, which what it was today. $3.50, which is $3,000, which is actually $35,000. Most of you guys have that. You don't have 35K, so all this shit in your garage. All right, okay. Buy 100 shares, 35K, write the cover call for next month. We're going to look at December 20th. If you guys don't have a stock market account, you can look at these option chains at Yahoo Finance. They have the option chains. And if you do have a stock market account, just click on option chain. They'll show you all the options. And this one you want to look at is 350. So let's say 370, about 370. So you agree to buy here at 350. So you spend 35,000, and you sell or write. They say write the 370 cover call for next month. In November, write December. In December, write January. January, write February. And that's going to pay you the premium here on the option chain. It pays you $23.25. Okay, and that's for selling the 370. So you're agreeing to selling it for a higher price if the stock goes up. You can get 20 points of share growth in the stock, and then you're going to get the premium regardless where the stock goes, $23.25 per share, or $2,325. So I lied. I said $1,500 is really paying $2,300. And if we take a look here, let's do the math. Shall we? Take your calculators. 23.25, which is a premium, divided by the share price, 350, equals 6.6% return. Now this is important because this is how you get retired in the stock market. Bitcoin, we know, is going to be all over the place, so be careful. But Tesla, a little bit more, I don't know, stable. It's going to be there. It's not going to be so volatile. It's paying 6% return on the cover call, and that means it's going to be 66% return per year. Just do 10 cover calls, right? And if you have, let's say, 100K, right, that 66K per year on paper, I mean, yeah, your stock could go down some, but the income is going to be around 60K, okay? Think of it like I always say, like cover calls is like owning an apartment complex of 10 units and renting out the rooms every month. You could own shares and rent your shares out every month. Right, the higher price, just above the share price, getting the cover call money, 6%, 4%, 5%. On CLSK, thank you by the way, was it Jim? 13%. And that's your business. That's your financial plan. What is your financial plan? You guys are going to be collecting receipts at Walmart at 75 years old. McDonald's taking orders. They'll hire you. They will hire you. They have a job for you. Is that your financial plan? All right. Appreciate you guys. I have this trade I want to show you, but let me take some more questions before I want to listen to you guys. I want to take your questions. Sorry that was too much. Okay. Let me scroll back a little bit. Thoughts on ETH. ETH. Add Stu. I think I need some power here. Thank you guys. You guys tap that screen for me. There's some people in here. If you can just give me 2 shares each at the bottom. Send this to 2 people on your list. Hit the share button. 2 shares each, guys. And just pat that screen. Give me some likes. All right. ETH. Take a look real quick for you. I'll read it for you. ETH. Grayscale Ethereum. Another Bitcoin, right? Fund strategy. The investment seeks the value of the shares to reflect the value of either held by trust, determined by reference to the index price, less the trust expenses and other liabilities. While the investment in the shares is not a direct investment in either, the shares are designed to provide investors with a cost-effective and convenient way to gain investment exposure to either. $3. Don't like the share price. The problem with a $3 stock is that it's $3 closer to zero. Because I know that some stocks go to zero, regardless of the company. And $3 is like closer to, like in a stock market crash. Okay, for example, guys, just hear me out. If you have Coca-Cola, right here, let's pull up Coke, KO. This is a little lesson for you, okay? Coca-Cola is $63 a share, okay? Even in a massive stock market crash, let's say the stock gets cut in half, it's still going to be $32, okay? You still have a $32 stock, but if you have ETH and the stock gets cut in half, it's going to go from $3 to $1.50. It's just closer to zero. That's the thing. And at a penny stock territory, it has no respect. So I'll probably do a pass on this one, but let me look at it for you. It's following either ETH. Where's the volume? It has the volume. 67 million. No options. No option chain. That's not good. So we're going to have to pass on it. They collect fees. They follow either, right? Doesn't have, no dividend. It's not a standard stock. I'm going to pass on it. But if you had small money, buy a few shares for $3, I guess it's cheaper. But remember, the cheaper stocks are not as good. Appreciate you. Thanks for the question. All right. Would you rather own Coke or Pepsi than gold? Michael David Robertson. Would you rather own Coke or Pepsi than gold? I like Pepsi better. PEP. It's performing better on the stock market. If you look at Pepsi for 5 years, for example, $164, right? So it's a better share price than Coke, higher share price. 5 years ago, Pepsi was 134, so it's gained 30 points. Let's look at Coke. 5 years ago, Coke was 53, so it's gained 10 points. So Pepsi has done better in the last 5 years, for example. Different reasons why it's better, but that's one of the things. Coca-Cola has a dividend of 3%, 3.4% annual dividend, which is nice. Pepsi, PEP. PEP versus KO. It's a battle of the bulge. All right, 3.28% dividend. So better dividend, better 5-year return. Do you see where this is going? Let's look at the volume. Pepsi has 3.8 million volume. At least, actually, let's look at the average volume. Hang on. Let's do our due diligence. Average volume is 5.4 million on Pepsi, and the share price is 164. Robust. Look at Coke. Coke average volume is 13 million. So much more, but the share price is also smaller. They're probably about the same in volume, considering the share price. And look at the PE. PE for Coca-Cola is 26. For Pepsi, it's 24. So Pepsi has a better PE. They're making better profits, right? So in 3 ways, Coke's better. PE, 5-year chart, and dividend. So do you see where this is going? So I'd have Pepsi. Gold is interesting. What some investors will do is actually buy the gold coins from the coin shop. And you pay like a $50 commission if you can negotiate that. And the gold is up right now, 2,600, I think. The gold price? What's the gold price? Should we ask ChatGPT? What is the gold price today? Gold doesn't give you covered call money, but it tends to maintain price. So I like having the coins and the silver coins too. What is the gold price today?
As of November 11th, 2024, the price of gold is approximately $2,635.65 per troy ounce. USA Today. This reflects a 2.29% decrease from the previous day's price. For more detailed and real sources.
So if you go to a coin shop, they'll probably sell you a gold coin, which is the Australian Cougarans or the gold leaf maples, for $2,635, plus they'll probably charge between $50 to $100 commission. So you're probably going to pay around $2,700 for a gold coin. But like I said, if you buy the coin, it holds their value. You can like trade it later. The gold price might go higher. You know, if the stock market crashes, for example, expect the gold price to go up, and that could be like a hedge. That could be like kind of like your SPY hedge, right? Your SPY put, we just talked about. And then you can buy the gold here, sell it in the market crash, and then what? Buy your stocks cheaper, your best stocks, not penny stocks, not crappy stocks, Pepsi and Coke and McDonald's and stuff that you know is good, Starbucks, Netflix. We start with Tesla and NVDA, right? Buy those cheaper. When those swing up in price drastically, like when Tesla breaks 414, write that down, you heard it here first. When Tesla breaks 414, sell, not right away, but at the right time, and then you can buy gold, and then on the crash, right, your gold goes up, sell your gold, and then buy your Tesla shares back. Damn, like I just got you guys back. I'm telling you guys how to retire in the stock market. All right, not too much. All right, so thanks for the question. Gold, I can't say nothing bad about gold. You know, I can tell you what stocks I like. I specialize in stocks. All right, more questions. Fidelity, you want to do? I know Fidelity is a mutual fund. I don't like mutual funds in general because mutual funds are ideally for people who don't know what they're doing, which is most people, because they're managing the money for you, right? I'm teaching you how to pick stocks from my criteria. I showed you 5 tonight or 6 tonight. There's really 11 I have. And then write cover calls, do trading, right? If you know how to buy the dips and sell the peaks, 1. Write cover calls, 2. Have a hedge for your protection in the crash, 3. Right? Trade these cycles like I'm telling you with gold and stocks, and there will be a correction. Like, just write it down in your journal somewhere. Godric said there will be a correction. And if there is a correction, be in a position to make money. Have a put. Have a SPY put. Have a gold coin or silver coins. Make sense? And back on Fidelity. So I'm telling you how to make your own mutual fund. How to pick your own stocks. How to make your own money monthly to pay your bills and retire in the stock market. And if you can do that, you don't need Fidelity. You don't need a dude in a tie, right? That works in a big building, that drives a Bentley, right? He takes his cut. He's not paying you. He's not giving you all the money he makes, managing your money, managing your mutual fund. He takes his cut. So we cut out the middleman. We do the investment for ourselves. Independence. That's what I teach. I'm in Ethereum, Bitcoin, sorry, LOL. Ace2, I pulled up the stock. Well, hope that was good enough for now. I don't specialize in crypto, so I kind of like the idea that Bitcoin's going crazy. I kind of like the idea that, like, you guys even know like what Bitcoin really is? Like, some of you guys can't even explain it. Right here, let me use ChatGPT. This is one thing ChatGPT is good for. Explain Bitcoin to a 10-year-old. What is it and how do you make money and how does it work? ChatGPT. Is that too much?
All right. Imagine you have a digital piggy bank that's not in your room, but on the internet. This special piggy bank uses something called Bitcoin as money. What is Bitcoin? Bitcoin is like digital money. It's not coins or paper you can hold, but it's a special kind of money that lives on the internet. People all around the world can use it, but there's no bank that controls it, like how regular money is managed. Instead, it's controlled by everyone who
have a digital piggy bank that's not in your room, but on the internet. This special piggy bank uses something called Bitcoin as money. What is Bitcoin? Bitcoin is like digital money. It's not coins or paper you can hold, but it's a special kind of money that lives on the internet. People all around the world can use it, but there's no bank that controls it, like how regular money is managed. Instead, it's controlled by everyone who uses it together through a huge secure network called a blockchain. How does Bitcoin work? Bitcoin works on a blockchain, which is a special type of record-keeping system. Imagine everyone has a notebook, and every time someone buys or sells Bitcoin, they write it down in their notebook. That way, everyone knows who has what amount of Bitcoin, and no one can cheat because they'd have to change everyone's notebook at the same time. This makes Bitcoin very secure. How do you make money with Bitcoin? People can make money with Bitcoin in a few ways. 1, buying and selling. Some people buy Bitcoin when its price is low and then sell it when the price goes up. It's kind of like buying a toy when it's on sale and then selling it later when people want it a lot and are willing to pay more. 2, mining. This is a bit more complicated, but it's like a digital treasure hunt. People use powerful computers to solve tricky puzzles on the blockchain network. If they solve the puzzle, they earn some Bitcoin as a reward. However, this takes a lot of computer power and energy, so only certain people do it. Why do people like Bitcoin? People like Bitcoin because it's fast to send to anyone, anywhere in the world without needing a bank. They also like that it's limited. There will only ever be 21 million Bitcoins, so they think it will become more valuable over time. Just remember, Bitcoin is risky because its price can go up and down a lot. Some days it's worth a lot, and other days it might be worth less. So you have to be careful if you want to make money with it.
Ask to explain it to a 10-year-old. I don't know. What do you guys think? That was about ChatGPT. That's ChatGPT OpenAI. If you like that, I don't know, you can try it, check it out. So on the Bitcoin investment, we talked about a few stocks, CLSK, or which is the volatile one, or BITO, which is a risky one. Or you can just go to Coinbase app or Kraken. Coinbase or Kraken, write it down. And then you can just buy the Bitcoins directly from there. And then you're buying the actual Bitcoin. I don't actually do that. I specialize in stocks. It's just a thing because it hit all-time high today, 88,000. And probably going to go to 100,000. Let's just be real. Okay, important question. Tommy, I sold a Tesla cover call, strike, 225 expiration, 11:15. What should I do? Tommy, you come to Godric for your stock market advice? Oh. The good news, Tommy, is you probably bought Tesla well below 225, and you want to know what to do when you're at a cover call for 225 when the stock went up to 350, when it shot up to 350. Keep in mind that you have the shares, let's say 100 shares, right? So you're protected because that's protecting you. Now you sold the call the 225. You probably made $1,000, which is what I was making when it was 225. And the stock has gone way up. So what's going to happen is, number one, the first rule is just to let it expire, let it get assigned. They'll sell the stock at 225. They'll cash you out. You'll have 100 shares at 225, not at 350, unfortunately. But you got your share growth, whatever it was, probably 10 points. You got your premium, whatever it was, probably 10 points, 12 points. So you got, what, $2,000, $2,200. And then you'll be cashed out, and then you'll be settled after the weekend on Monday. Now, most people are happy with that because you can wait till it dips back. You can buy in, or you can just go into another stock, go into NVDA, go into, I want to show you, if I have time, Palantir, PLTR, that one's doing well. And also, there's another one, there's a risky one, SMCI, Super Microcomputer, SMCI. These are examples of high earning cover calls. There's also we talked about Tesla, TSLA. We talked about NVIDIA cover call, NVDA. So the other thing you can do when you have a cover call when it gets way out of line, when it shoots way up, is you could buy back your cover call. Okay, but let me explain. Let me pull up your position. If you have a 220 November 15 call, it's going to be really expensive. So let's see. Tesla. You sold on November 15th, cover call, and that one has shot up. And what do? You can leave it there, let it expire, let it get assigned. They'll cash you out. No issues. You made your money. You didn't make a lot of money, but you made consistent monthly money. And that's enough to what? Pay your bills and retire into the stock market. All right. November 15th is coming up in 3 days. So if you want to buy back the cover call, you're going to be paying how much? $124. You're going to be paying $12,000. But you probably wrote this call for $12. So you're technically paying like 11,000 more to buy it back, which is technically a loss on the cover call. But guess what? But then if you buy it back, if you spend 11 grand, 12 grand, now you own the shares again at 350. See, right now you have to sell the shares at 325. But if you buy the cover call back for 12 grand, now you own the shares again free and clear at 350. Okay? So you're not actually losing money because now you're getting your shares back. So the difference between 225 to 350 is $1,200 $1,250. Oh, look, the call to buy back is $1,240. So technically, you're not losing anything. The problem with buying it back is this: if you buy it back for $350 share price for 12 grand, your 220 call, and then you own the shares free and clear at 350, and then the shares were to drop right after you buy it back. Let's say it drops to 300. Guys, they give me the puzzle because you guys aren't tapping that screen, man. You guys tap that screen, pat. Give me some likes, like your video game, pat. And give me a couple shares, will you? Thank you for the likes. Get these people in here for me. Jesse James, welcome. Music, welcome. Debut, Tommy, welcome. Appreciate you. Silver, welcome. Godric here, your stock market mentor. We're talking about Tesla, talking about buying back the cover call. Is it worth it? Okay, so if the shares were to dump right after you bought it back, then you would be technically at a loss because you paid more money to get your shares back than you lost your share price. So in essence, it's safe just to let the stock go, let it get assigned, take your money you made, whatever it was, 10%, 5%, whatever it was, and then get your cash and then wait, be patient, wait for it to dip again to get back in. Or you can go into another stock, NVDA, Palantir, etc. But if you buy back that cover call, what you could do, instead of waiting for it to crash or dip, you can immediately write the next cover call. So we spend 12 grand, we get our shares free and clear, which is kind of like a wash. We don't really lose money. And then what? We're gonna write next month, December 20th. We talked about writing the 370 call, and that's paying $23, which is more than you probably got last month because the stock is up with hype. So again, you want to do the math on that. $23 divided by 350 share price is 6.6% return, 6.57, which is a great return. So you could just buy the call back, spend the money if you have the money. If you have the money, you got 12 grand laying around. Then you own the shares outright. Write the next cover call next month. And that way it's kind of like a wash, but you keep your shares and you're going to make the premium for the next month. Now, again, if by next month Tesla goes to 400, we're in the same position, right? In a way, it's better not to have written the cover call because what? Because you're getting 100 points here on share growth. If it goes up another 50 points, you get 50 points of share growth, but you're only getting 12 points on cover calls, 23 points on cover calls. So, in essence, like if the market share was just to go up like crazy, or the stock was to shoot up, it's better that you didn't have a cover call because you make more money on the shares, right? But let me explain. Don't take that risk. I still want you to write the cover call, even in a bull market. Why? Because a bird in the hand is worth two in the bush. I'd rather you get consistent money monthly, 1,000, 2,000, 700 from NVIDIA. That CLSK stock was paying $223. I'd rather get you consistent money monthly, every month, than to hope for a return, to hope for a big return, which may or may not come. Anyways, if Tesla was to shoot up, you don't really get income. You have to sell the shares, right? So you're not really getting income to pay your bills, to retire in the stock market. You're just getting share growth, and to pay your bills, you have to sell the shares. That's why dividends are great, because they're giving you a quarterly income every 3 months, every quarter. That's why cover calls are great, because they're giving you a monthly income. So I'm going to advise you to stay in those cover calls, do the monthly return. Even if the stock's shooting up, you can just let it go, like I said. Choice 1 or option 2, buy your option back, write the next cover call immediately, get more return, and you're better off unless the stock were to dump. Then you're going to lose share growth, and you would have wished you waited to buy it back cheaper. Trading, man. Is that too much? Make sense? What do you think about BlackRock and CME? That's big questions there, Sterling. BlackRock was like $1,000 a share when I saw it. Let me see. I don't have BlackRock. BLK, 1,055. It's going up like crazy. I'm pretty sure it's at all-time high. The equity on the 5-year chart for BlackRock is 500. It went from 500 to 1,050. So it doubled in price in 5 years. BlackRock, BLK, $1,055. Now that's a robust share price. It was up 14 today. BlackRock Incorporated, a publicly owned investment manager. The firm primarily provides its services to institutional, intermediary, and individual investors, including corporate, public, union, and industry pension plans. Pensions. Insurance companies, remember that hedge, that SPY put hedge. Insurance companies, third-party mutual funds, endowments, public institutions, and banks. Oh, of course, just throwing the banks in there. It also provides global risk management advisory service. Okay, so they manage money, okay? Volume, 681K, so less than 1 million. But since the share price is 1,000, right? What you do in that way, because I like to say you need 2 million volume a day, right? But the share price is 1,000, so factor in the share price. If the share price was 100, that 680K is really 6.8 million. So the volume is fine, okay? Dividend, they pay 1.9% dividend, which is great. 2% dividend. I'd rather have it than not have it. PE is 25. They have a PE. They have a dividend. I don't think they'll have a cover call, but let's take a look. So far they got 4 out of 5 check marks. Let's look at next month. Let's look at all. Okay. December 20th. Buy the shares here for 1,055, which is only 100K. If you guys don't have 100K, think about what you've been doing for the last, 20 years, some of you guys. All right. Buy 100 shares here, 100K, 105K. Write the cover call for, at the most, paying 33, which is not really enough, I'll tell you that. We can write the 1,070 for $23. It's paying actually what Tesla's paying. And Tesla's like 1/3 the price. But let's do the math. $23, it pays for the 1,070. So buy the shares here at 1,055. Write the 1,070 cover call. 23 divided by 1,055 equals 2.18% return. Not a great return. I like to get 3 to 5%. So it doesn't have the cover call. 2.18% return. That's still 21% return for the year, which is not bad. It might be better just to hold the shares to look for that share growth. But BlackRock gets 4 out of 5 check marks. Thanks for asking. Okay, Dogecoin. Don't make me look at Dogecoin. Mara. Caesar, Mara. Oh, you know what? We have a trade for Mara, actually. So you can find. You guys want to know. Mara's also Bitcoin. Oh, by the way, on this Tesla, real quick, I'm showing that there's a spread trade I want to show you, okay? A spread trade on Tesla, right? It's a way you can put less money and get a good return with less risk. Real quick, let me run it by you guys. What you do, you're going to go out to February. You're going to buy +1 call 380, okay? And here it's showing the price of $36. Okay, so that's 3,600. But wait. While we do that, we're going to sell the 400 call. So it becomes a spread, okay? And the 400 call is giving us back 3,057. So really, this position cost us $600, okay? So listen up. You buy the 380 call for February. You sell the 400. It's a 40-point spread. Write that down. 40-point spread. The requirement for this investment will be $4,000 minus 600, which is the premium you get back. So it's going to cost roughly $3,400 to do this trade. Okay, and you're roughly you're roughly investing $600. This is tricky. You roughly invest $600, but it's going to hold $3,400 to do the trade. Okay, because it's a 40-point spread. But you're roughly investing $600 because you're paying $3,600. You're getting back. I'm sorry, that's not right. Let me do this right. You're getting back $3,000. You're paying $3,600. You're getting back $3,000. Okay. See, it's costing you $600 out of your pocket, but they're going to hold $3,400 in your account to do the trade. Does that make sense? Is that too much? So the result of this trade is going to be this: if Tesla can break $400 by February of next year, you're going to have a maximum return of 40 points, which is, 380. It's a 20-point spread. I gotta get it right. It's a 20-point spread, so it costs you $1,400 requirement to do the trade. And if Tesla can break 400 by February, you're gonna have $2,000 return on this 38 call, and it's costing you $600 to do the trade because you're paying $3,600, you get back $3,000. So the total return is going to be $1,400. Okay, so $600 to $1,400. That's what'll happen if Tesla can be above 400 in February. If it's not, then you're going to have some loss. If the break even, since you put 600, the break even is going to be 38 plus 600. So the break even is going to be 380. At $380, it's a break even. 380 share price. 386. And let's say if it's only 380, then you're going to lose $600. And if it's actually the most you can lose is 600. That's important. The most you can lose is $600 because you only really cost you $600 out of your pocket. So you can lose $600 or make $1,400. That's why it's good. That's the spread. Write it down. Take a picture. This one and this one. Take a screenshot, guys. Tesla spread for February. Gonna play with Elon, bring the money. Okay, Mara. Let's talk about Mara. I think I might have. Mara here. Ta-ta! Thank you for the question. Whoever asked about Mara. Mara is a Bitcoin investment, right? Let me make sure to use the right information. $25. Not a robust share price, but enough. MARA. Mara Holdings. Probably similar to CLSK, let's say. Mara Holdings Incorporated operates as a digital asset technology company that mines digital assets with a focus on Bitcoin ecosystem in the United States. The company has formerly known as Marathon Digital Holdings and changed its name to Mara Holdings in 2024. Incorporated 2010, Lauderdale, Florida. Okay, so watch out for those guys in Florida. You've been warned. But Mara is 125 million volume. Hello. $25.59 a share. $25 a share as of earlier today. It's already up in after hours. And let's do the cover call. Yeah. December 20th. Buy the shares here for $2,500. $25.50. And then do the cover call for December 20th. Actually, we're going to do $25. It was $25 earlier. 25.01. And if you write the 29, for example, hang on. Here's the call option I want to show you. Actually, I have the call option here. Here's the, yeah. So here is an example of what the option chain looks like. Guys who have a stock market account, you can pull up the option chain. And this one pays a great cover call return, similar to the CLSK. So you buy the shares here at 25, spend $2,500, and you write the cover call for December. And we're going to do, I circled the 29 and the 30, right? The 29 is paying $3. So MARA, $3 for the 29 CC cover call. And then the 30 is paying $280. Both great returns. What you're doing is you're agreeing to sell the shares. You're buying the shares at 25. You're agreeing to sell them at either 29 or 30, which is like a nice profit by itself. Then you're going to get for that either $3 or $280. Let's just do the math. 25, actually, the premium of $280 divided by $25. 11%, 11.2%, 11.2%. And then if you want to get the $3 return for selling at 29, $3 divided by 25, 12%. Very close to the CLSK. And I would be probably more biased towards Mara because I know that a little bit better. But it's paying 11-12% a month, 100% return for the year. It's like you guys need to learn how to do these trades. Like this is not going to last forever. This is like a special time when you're getting more. Like back in the day, 10, 20 years ago, most of these returns were like 3% a month, and that was a great return. Now they're like 5%, 10%. There was no Bitcoin trade back then in my heyday. There was other stuff, There's always something, But this is a special time when things are hot. We're in a bull market. We're getting more premiums, so you got to take advantage of that. If I tell you to buy gold when the stock market is good, that gold will go up when the market crashes. I want to tell you to buy your put hedge a year out. When the market is good, that put will go up when the market comes down. This is trading. I'm teaching you guys these golden nuggets. Write it down in your journal. Look. Got my Stegler pencil. All right, questions. Guys, we're already way past our time. I don't want to keep. Some of you guys need to go to bed. I'm going to do a couple more questions and I'm going to close out. Appreciate you. If you guys want to throw me a crane if you do gifts, appreciate you. You want to give me a sub, it's only $5 a month. I'll teach you how to do these trades. Buy stock plus sell call. Yes, 003 RR. You're buying 100 shares and then you're selling a call higher than the share price. Because why? Because I want you to get share growth plus premium. That's why. If you can get 5% a month, you're doing great. Because what? Because if you can get like 100K in your account, 200K, 5% is between $5,000 to $10,000 a month. That's why. You get your account to $1 million. That's like what? 5% is $50K a month. Do you hear what I'm saying? Like some of you guys, I just want to protect you from working at Walmart and McDonald's when you're 75. I got your back. Follow me. Anybody who follows me, I'll follow them back after the live. All right. App or program? WARS, app or program. If you're asking me, it's not an app or program. It's a stock market account where you're writing cover calls. The app is the Schwab app, or whoever you have your account with, they have an app. This app is TD Ameritrade Thinkorswim, which is on the Apple, which is on the iTunes store, but it's through Schwab now because Schwab bought TD. So whoever you have an account with, they'll give you the app. If I buy Dodge right now for 2K, do you think it's a good growth? Jenny, I don't want to advise on Bitcoin or crypto. I don't know. But right now, the coins are hot. Probably they'll go higher. That's just it's in an uptrend, right? But at some point, they're gonna dip. So my advice: take a small gain and walk away. Questions. Appreciate you guys. Just wrap it up. I just got here. Can you explain what we are looking at? Ellie, just got here. Can you explain what we're looking at? Thank you, Ellie. Let's do this and let's wrap up. Guys, I'll come on every Monday night. We talk about some stocks. We look at some positions. I'm going to show you my top 10 stocks, why they're good. I'm going to show you my 11 criteria how to pick a good stock, why they don't teach you this in school, why they don't teach you this in college, why they want you to work 40 hours for 40 years and to retire and be broke and be a servant. I'm trying to teach you how to be an independent stock market investor. Specialty is cover call writing and make it put writing and generating monthly income. And these trades I have here, Mara, for example, it's a Bitcoin company. It is a high risk because it can come down, but look, it's paying 10% a month. It's going to be 100% a year. What's really the risk, you know? If you want to do real stock companies like Coca-Cola, Pepsi, PEP symbol, KO symbol, those are good dividend stocks for long term. Like Starbucks, also dividend, SBUX, Starbucks. Showing you how to do cover calls on NVDA, which is going up. Tesla, which is going up. NVDA, TSLA, write it down. You open up your stock market account, buy these shares. If you can get 100 shares, you can do a cover call. Cover call means you own the shares, you write the higher strike, you sell your shares to the public every month. Generate income, 3% a month, 5% a month, 10% a month, some of these stocks. At 5% a month, you're getting $500 for every 10K. You're getting $5,000 every 100K. Do the math. These are trades that most people don't do. They don't know about them. I'm teaching you how to do it. I'm teaching you what I know for 35 years in the market, 36 years. Thank you, guys. Appreciate you. I will be back probably later in the week. For sure, I'll be back next Monday. Send me a DM if you have any questions. Just one question at a time, please. Check out my subs. If you want to look at my YouTube, it's on my profile. I record all the sessions. You can watch the whole live. I also do one-on-one mentoring. Inquire. Godric out.